Hello and welcome to Finance Conversation. This is the Merging Life and Money Show, and I am super excited to be here with you. Today is International Accounting Day. It is a day to celebrate the important profession of accounting. This day is a time to reflect on the impact that accountants have had on businesses and economies around the world. It is also an opportunity to acknowledge the hard work and dedication of accountants everywhere in the world. So if you are an accountant, thank you very much for what you do to make the world a better place. And if you know someone who is an accountant, today is a perfect day to show your appreciation. Welcome to the Merging Life and Money Show. Today, I am going to continue the conversation about savings, and I will be talking about what you should know about savings accounts, and I will also explore the 6 types of savings one should have. So before I get into it, for those of you who do not know me, let me introduce myself. I am your host, Marie-Jo César. I help professional women, in particular, transform their relationship with money by giving them the necessary financial knowledge and skills they need to take control of their money, manage their finances, and recognize that they can live their best lives with the money they have. So thank you for joining in today. So as usual, if you're watching the replay, it would be nice if you could type hashtag replay in the chat. And also feel free to leave me some comments and some questions. I'll be delighted to get back to you on this. So that you know, I come to you live every Thursday at 5 p.m. Pacific Standard Time to share tips, tools, techniques, inspiration, I would say motivation, and to give you valuable information about how to achieve financial wellness and live your life with means and meaning. So, as some of you may know, the Merging Life and Money Show's primary purpose and my very strong why is to empower as many women as possible by sharing what I know about money and finance so that they can live their greatest lives yet. So grab a pen and a notebook because you may want to take some notes and you may want to share them and you may want to discuss them with family members, co-workers, neighbors, friends, whoever you want to, because it is about sharing values that could benefit others. So if you are listening on iHeartRadio, Pandora, Spotify, or any other major podcast platform, I welcome you. I am very glad that you have joined in today. So let us start. As I just mentioned, I will continue the conversation about savings. And I'll be talking about savings accounts, what you should know about them. I will look at the different type of savings accounts there are. And I will also zero in on the 6 types of savings I believe everyone should have. Okay, so to give some context to today's show, some context, when it comes to savings, I would say saving money, a lot of us know that we should be doing it, but we don't always do it, right? So one of the best places to start is by opening a savings account, as savings account offer a lot of benefits, including safety and security for your money and the potential to earn interest on your deposited funds. So let's look at what you need to know about savings accounts so that you can decide if opening a savings account is the right thing for you to do. Which takes us to the first point of today's show. What do you need to know about savings accounts? Okay, and what are savings accounts and how do they work? So, well, saving accounts are types of bank accounts that allow you to set aside money on a regular basis and earn interest on your deposited funds. And they are typically used for long-term financial goals like saving for a down payment on a house or saving for retirement, right? And they could be used for, less long-term as well. So how do they work? Savings accounts work by letting you deposit money into the account on a regular basis, right? The account then pays you interest on your deposited fund. You must also know that the interest rate on savings accounts is typically lower than the interest rate on other type of investment account, such as stock portfolio or real estate investments. However, saving accounts are much less risky than these other type of investments, which means that they can be a good option for people who are risk adverse and who are just starting out with investing. So you may be asking, okay, what are the benefits of having money into a savings account? I would say that the benefits are many, right? You can access your money at any time, unlike with some other investment type account, such as stock portfolio and real estate, as I mentioned a few minutes ago. And in some cases, not only you can access your money at any time, but you can also do so without penalty. Okay, so this makes savings accounts a good option for people who want to maintain liquidity and meaning maintain the ability to access their fund quickly. Another benefit is that your money is FDIC insured. FDIC stands for Federal Deposit Insurance Corporation, which means that your money is backed by the full faith and credit of the United States government for up to $250,000 per depositor per institution, per bank, right? This ensures that your money is safe in the event that the bank fails. And of course, the second benefit is that you can earn interest on your deposited funds, as I mentioned. Note that the interest rate is usually lower than what you would earn in other type of investment, but it is still free money, right? So when you can get it. So you must also know that savings accounts have some requirements. Most savings accounts have a minimum balance requirement, which is the minimum amount of money you must keep in your account to avoid fees. Additionally, some accounts have a monthly maintenance fee, which is a fee charged each month regardless of the account balance. Okay, some accounts also have terms. So the term is a length that you have to keep the money into the account. Savings accounts can also have a withdrawal limit. This is the maximum amount of money that you can take out of the account during a given time period. You should also know that there are some tax implications with savings accounts. Interest earned on savings accounts is subject to federal income tax. However, you may be able to avoid paying taxes on your savings if you use the money for qualified expenses such as education or medical expenses. So be sure to talk to your tax advisor about the best way to minimize your tax liability as far as savings accounts are concerned. Last but not least, savings accounts do carry risks. Okay? The biggest risk of savings account is that you may lose access to your money if the bank fails. However, as I mentioned just now, the risk is mitigated by the FDIC insurance. Additionally, savings accounts are subject to inflation, the I word. And as you know, inflation can take a big bite out of the value of your savings every day, particularly now. So I will end this point by saying that when choosing a savings account, there are several things you should keep in mind. First and foremost, you need to make sure that the account is FDIC insured. This will ensure that your money is safe in the event of a bank failure. Second, you should compare interest rates from different banks to make sure that you are getting the best deal possible. And finally, you should look for promotional offers from banks in order to get the most bang for your buck. Okay, promotional offers can include things like bonus interest rates and even waived fees. So now let's take a look at the second point, the different type of savings accounts, because they come in different flavor. When it comes to savings account, there are a lot of options out there. Okay, so the question is, which one is the best one for you? I would say that it depends on your savings goals. It depends on your individual needs and preferences, and of course, on how much risk you are willing to take. So let's see what they are. The most common type of savings account is what we call traditional savings account. These savings account offer basic features, okay, and relatively low interest rate. They also tend to have low fees and no minimum balance requirement. And most importantly, they are federally insured against loss. I will say that they are a good option for people who are just starting to save. The next type of savings accounts are money market accounts. Well, money market accounts typically offer, I would say, higher interest rates than standard or traditional savings accounts. They offer check writing privileges and sometimes even debit card, making them convenient. Making them a convenient option for people who want easy access to their cash. But, and yes, there's a but, money market account balances are typically required to stay above a certain limit, or else you will be charged a fee. Then you have a third type, which I will say, what they call them CDs, or certificate of deposit. They typically offer higher interest rate than the standard savings account or the money market accounts. Okay. They also tend to have fixed interest rates, which mean you know exactly how much you will earn on your investment, thus making them a good choice for people who want to earn steady return on their investment. I will also add that while they tend to have a fixed interest rate, they also have early withdrawal penalties. So it is important to make sure that you will not need access to your money before the CD matures. Last but not least, you have the individual retirement accounts that they call IRAs. They offer a variety of tax benefits, making them a good option for people who want to save for retirement. There are two main types of our IRAs, the traditional IRA and the Roth IRA. Each of them has its own unique benefits, so make sure to talk to a financial professional to see which IRA is right for you. So I will end this point by saying that savings accounts offer several advantages, including, easy access to funds, federal insurance, and promotional bonuses from banks. So when choosing a savings account, right, be sure to compare interest rate and look for promotional offers from different banks. With this information in mind, you can use savings accounts to your benefits and ensure that your money is safe and accessible, particularly when you need it. Now to the third and final point, the 6 types of savings I personally believe that one must have. As we know, saving is the intentional act of setting money aside for specific goals or purposes, right? So saving is not the absence of spending. So don't get it twisted here. No matter where you are on your financial journey, you need to know that it is possible to turn your financial life around and start saving money. So sometimes all it takes is that first step in the right direction to get things moving in your favor. As I mentioned last week, when it comes to saving, remember that a part of all of that you earn is yours to keep, at least 10%. So before spending money on anything else, pay yourself first. Okay? So here are the 6 types of savings that I really think that everybody should have if they can. It is foreseeable that there will be some emergencies during the course of your life, right? And in fact, recent statistics show that 55% of Americans have experienced a financial shock that left them struggling at some point in time in their life. In many cases, that hardship could have been avoided with an emergency fund. So from a family emergency that could require you to fly across or even out of the country, to less emotional emergencies like a broken down car or a leaking dishwasher, having a decent amount of money saved up keeps you from adding financial stress to the pile. It is even more important in a time when people are at risk of illnesses and job losses, like now. So what are the 6 types of savings? First one that I identify is emergency savings. Well, emergency savings can provide debt-free means to withstand a financial shock, such as a long-term illness, as I mentioned, or job loss, or any type of unforeseen auto or home repairs. Okay, the sad part is that many people don't have this kind of safety net. In fact, according to a survey done by NBC in January of 2020, only 44% of Americans could cover a 1,000 emergency without having to borrow money or selling something to realize the cash. I would say that you can think of emergency fund as a kind of insurance policy funded and underwritten by yourself. Because basically, by putting these funds aside for the future, you are paying yourself instead of an insurance company, right? So since you never know when an emergency might happen, this money need to be fairly liquid, as you will need to access it quickly and easily, right? So this fund should be kept in, I would say, a high yield savings account or a money market account, because in case of an emergency, the last thing you want to worry about is withdrawal fees. Also, you should increase your emergency funds from time to time to account for changes such as the rise in cost of living or additional financial obligations. So do yourself a favor. Help your future self by having an emergency fund, and hopefully you won't need to use it. But if you do, you will be prepared. And lastly, should you have to use it, make sure to replace it as soon as you are able. Second type of savings you must have is retirement savings. While savings for retirement is very important, we live in a world that encourages us to spend wastefully, to accumulate more than we need, and put off things like retirement savings until we are basically retired. As a result, many people are ill prepared for retirement because either they are not saving enough or are not saving at all, right? And the Consumer Federation of America found that only about half of non-retired people are putting away sufficient funds to support what they consider a desirable standard of living when they retire. That is sad, because retirement may be the single biggest expense in many people's lives. Think about it. You may be living for 20 or more years with no active income. So it is never too early to start saving for retirement. And I could tell you the size of your retirement account will likely determine when you will retire, because retirement is not an age. It is an amount of money saved. So while your parents or grandparents may have had a pension plan that kicked off at 65 on the nose, that may not be the case for the younger generations of workers. Instead, the 401k model of retirement requires that employees do their own savings. I would recommend contributing at least between 10 to 15% of your total income. If you can contribute more, do so using both your 401k plan and an individual retirement account, that IRA that I spoke about. Remember that each dollar you save is going to be worth less by the time you retire, because inflation takes a bite at it every day. So the goal there is to invest so that your investment growth beats the rate of inflation. Therefore, be mindful about playing it safe. Hoarding cash is a definite no-no. Truth be told, as long as we are in this pitiful low interest rate environment, you can forget about conservative options such as treasury bonds and savings account. Things are turning a little bit, but the jury is still out on that one. I would also remind you that your IRA is another tax advantage saving option, but early withdrawals from it or from your 401k plan can result in large tax penalties. So beware. Third type of saving that you must have: medical savings. This is money set aside to cover a medical emergency, especially one that your health insurance may not cover. So this form of savings must be liquid in order to be accessible in the event of a medical emergency. I know of three types of medical savings plan: health saving plan, HSA, flexible spending account, FSAs, and health reimbursement arrangements, HRAs. They are intended to pay for or repay you for medical expenses that your standard health insurance does not cover. So each of these schemes operate somewhat differently and provide some tax advantages, by the way. So additionally, contribution to these accounts are tax deductible. So like any healthcare option, they have advantages and they have disadvantages. So as you weigh your options, think about your budget and think about the healthcare you are likely to need. So if you join your employer-sponsored plan, your options will be limited to what your employer's plan offers. And if you are unsure about the benefit offered, talk to the Human Resources Department. Ultimately, the best plan for you will depend on what you have access to, right? Whether you want to contribute to your plan and how much you intend to contribute. Fourth type of savings, education savings. Education is important, whether it's your own or your children's, okay? That's not even a question. A college degree, despite the rising cost of tuition, remains a major achievement and requirement in today's society and economy. So according to data from the College Board, the average tuition fees, I would say, in 2021-22 for public four-year college was $42,960 for state residents and $110,000 for non-state residents. And an average annual room and board was $11,950 that you have to add to the cost of college. So don't even talk about tuition in private college and university. The average four-year college tuition there was $152,000. At the end of the day, college savings require careful planning and starting early, utilizing the many college funding that are available. And some of the options are grants and scholarships, loan, prepaid college plans, covered education savings accounts, what they call ESA. You could use your Roth IRA for that as well. There are some other instruments like index universal life policies, which are there. And they have custodial accounts, UGMA, Universal Gift to Minor Act, and UTMA, which are Uniform Transfer to Minor Act. And of course, savings is there, and cash if you have it. So do your research, as each of these options have their pros and cons. Okay, fifth one, personal savings or goal-specific savings. Personal savings is money you put away for non-immediate use. It is not for an emergency, not for medical expenses or retirement. Okay, this account is there to help you save for your next big purchase or expenditure. It could mean a car, a vacation, or perhaps home renovations, or even a down payment on a home, right? So it could also be for a major life event like a newborn baby or planning for a wedding. So based on the rate at which you are saving for this big purchase or life event, you will know when you would need the funds, and you will decide how long you must let your money grow and do this in a relevant savings vehicle. Truth be told, you should always set a little money aside for enjoyment. For nothing is wrong with having a little fun, okay, without harming your financial future. 6, which is the last type that I would recommend, is to have a financial legacy savings. The question is, what type of financial legacy would you leave behind upon your death? Would it be debt and financial hardship for your family? Or would you leave a legacy of financial strength, foresight, and dignity? Consider the significance of your financial legacy to others around you. So whether you are 20 or 90 years old, the way you handle your finances will have a positive or a negative impact on your loved ones. Okay, so think about eliminating your debt, reducing your spending, and prioritizing saving and investing your money. Okay, that's important. It is one of the most effective methods to honor your loved ones. So I will end this point with this statement. Saving should not just be a temporary reaction to a financial crisis, but rather a way of life. Okay, so let us wrap up. Oh my God, 31 minutes. And summarize what I addressed today. I talked about the power, not the power, I did that last week. I talked about the various savings account that there are and what you should know about them. And I also talked about the 6 types of savings I personally believe that you must have. So just to recapitulate, to summarize, make it simple, I will say that savings accounts are a great way to save money. They offer a safe and secure place to keep your money, and they pay you interest, okay, on your deposited money, your deposits. So, however, there are a few things that you should know before you open a savings account. First, make sure you understand the fees, as the fees that associated with the type of savings account that you have, because some banks charge monthly maintenance fees and others charge transaction fees. Okay, so be sure to ask about these fees before you open the account. Okay, there are a lot of competition out here, so there are other institutions there as well. Second, consider the interest rate on your savings account. The higher the interest rate, the more money you will earn on your deposit. However, be sure to compare the interest rates of different banks before you choose one. And finally, remember that some savings accounts are a long-term investment, and you should not be withdrawing your money or all your money at once, right? Otherwise, you would incur a fee. So withdraw only what you need and do it when you need it, and you will be able to maximize the benefit of your savings account. And my last words for today's show: savings account interest rates are important, but they are not the only factor you should consider when choosing an account. So be sure to compare features and fees before you open an account so that you can find the best deal for your needs. And as you know, I like to end the show with a quote. And today I selected a quote from Dave Ramsey. And it reads, "An emergency fund convert a crisis into an inconvenience." So this brings us to the end of today's Merging Life and Money Show episode. So I hope that you have enjoyed the show. And again, I will encourage you to watch the replay and make sure that you share it with others. So for more information about how to achieve financial wellness from the inside out and live a purposeful life with the money you have, join me next week, Thursday at 5 p.m. Pacific Standard Time, 6 p.m. Mountain Time, 8 p.m. Eastern Time, 9 p.m. Atlantic Time for my Bermuda pips, and 10 a.m. Friday, Brisbane, Australia times for my Australian friends. Thank you for being here today on the Merging Life and Money Show. I am your host, Marie-Jo César. I will be back again next week. Until then, continue merging life and money. Bye for now.